Mortgage rates just hit their highest level in a year. The 30-year fix now 6.66%. That's according to Freddie Mac. Our next guest says these elevated rates are changing homeowner behavior. Joining me now on this, we've got Dan Lotano. He is the Chief Operating and Strategy Officer of GoodLeap, a fintech that offers financing and software products for home improvement projects. Dan, it's good to see you. Maybe start kind of big picture, Dan. Just for viewers who are not as familiar with GoodLeap, just walk us through the mission there. Explain it to us.
Absolutely. Thanks for having me on. So GoodLeap is a technology company that sits at the intersection of contractors and homeowners and investors and acts as that platform that unites everyone to help drive smart, sustainable home solutions across the U.S. to the tune of 1.5 million customers helped, thousands of contractors on our network, and over $30 billion of financings since 2018, all in the name of helping to drive better affordability across homeowners in the U.S.
So is the way to think of it, Dan, is it a financing platform, and you're the one basically bringing together the homeowner, the lender, the contractor?
Yeah, part of it is certainly providing access to capital for the counterparties, but it's also so much about educating homeowners on what's possible. So you talk about mortgage rates hitting an all-time high. And more homeowners who are traditionally now stuck in their pandemic era rates are looking for other solutions to tap into what sits today as over $35 trillion of equity in their homes. And so part of our mission here is to educate them on other tools and other ways they can use their home, not just as a something to draw money from, but how to actually invest in them.
So what?
And that was.
Yeah, I'm sorry. Go ahead, Dan.
No, go ahead.
I'm just curious, what are homeowners spending money on right now then, Dan? Is it mostly solar? Is it batteries, heat pumps? What do you see?
It's across the board, right? Like some of our biggest verticals are things that aren't necessarily discretionary in nature. So you think about a roof that needs to be replaced, an HVAC unit that goes out. These are things that aren't discretionary in nature and need to be spent on money today. And at the same time, homeowners are looking for ways to drive better affordability when it comes to electricity rates. So you mentioned solar and battery, and certainly with the proliferation of AI and all the data center usage out there, it is driving rates up. And so whatever homeowners are ultimately looking for, whether that be those emergency spends or more discretionary items that look to help save money in their homes, that's what we're helping to finance across the board. And we see that in scale in all these different verticals. Well,
what is the payback, Dan? Like if a homeowner spends thousands, or maybe it's tens of thousands, how long is it typically the timeline before they see material savings from that?
If you're talking about the energy side, it depends on the state and local areas that you're in terms of rates, but those are typically earned over the next few years, sometimes up to 10 years, depending on the location you're at. Someone like GoodLeap, what we're trying to do is, again, back on the education side, is, hey, these aren't just assets that you put in your home one time and you forget about them, but how can they engage in the current environment as well? So you're seeing an increase in things like virtual power plants and how homeowners can utilize their assets, whether it's solar, battery, HVAC, heat pumps, and use that excess energy when they're not using it to sell it back to the grid and earn cash for their participation in helping to help balance out all the electricity needs across the U.S. So what was once just a hedge against rising electricity rates is now an actively managed way to drive more cash from these assets that typically weren't available before now.
Financing costs, Dan, are higher than they were a few years ago. How is that impacting demand?
Yeah, it's part of the overall equation, and that's what through the GoodLeap Home Card that we launched earlier this week, we're trying to give them access to a lower cost of capital in order to do that. Their home is most likely the cheapest form of capital a homeowner will ever have versus 20% credit cards on an unsecured basis. And so we launched this program in order to have homeowners have access to this capital, a very flexible way, and them determining how and when they want to use it. And then this overall solution, right, through this network of contractors that we have, through the education we can help provide and recommendations, through the electricity management, we can help them earn cash back on we're helping them to offset a lot of that rising interest rate cost by tapping into non-traditional or new methods that they didn't have available until now.
You mentioned, Danny, how part of your role there is education. So I'm curious, what are some of the bigger misconceptions people tend to have about going solar or making their homes more energy efficient?
I think a lot of it is just learning how electricity, like what the rates of electricity are. Like a lot of homeowners, or not most all homeowners, know what like a gallon of gas is, right? When it comes to what's my rates and how does that vary depending on when I use electricity throughout the day, that's a brand new subject that people are starting to get more and more educated over time. And so when they think they get solar on the roof or they install a battery, that they're not going to have an electricity bill. And they're still going to have an electricity bill because there are minimum rates and charges that these utilities still need to have to cover their cost. But a lot of it is educating them on how and when to use that energy and how to store it through batteries or manage their load of when their HVAC runs so they can become really smart and manage that bill as low as it could possibly be. And that's a big function of what we try to help them with.
Do you think, Dan, 3, 5, 10 years from now, does just average typical American home, does it look a lot different, Dan, than it does now? Would you forecast more solar panels, more batteries?
I think people are going to become more intelligent on this area, and they're going to want to make more investments, especially when they see the payback that's available. And they're part of the overall solution that's helping to balance some of this demand around energy and AI that we see. One of the more interesting advancements that I've seen over the last couple of weeks is, in addition to these solar and battery and overall energy management systems, there's now distributed compute that's being placed in people's homes. And so instead of just having data centers out in the middle of wherever, some companies are turning towards using people's homes and attaching them to these energy devices and then running some of the inference from those houses themselves. And so I think homeowners are going to find themselves increasingly part of the overall solutions that we need to advance all these initiatives in the U.S. And in a way that, again, using their home to help create value for themselves instead of just making it be an expense that would otherwise, compromise their monthly budget.
Dan, great to have you on the show today. Appreciate your time. Thank you.
Thank you. Take care.
Sticking to that fintech theme, earlier this week, Yahoo Finance Executive Editor Brian Sozzi caught up with Robinhood's CFO to discuss the company's latest results and more.
So our vision is we want to be the financial super app or the family of apps. And if you look at it, we can serve customers across a wide variety of products. So Vlad actually demoed a lot of our apps yesterday. So everyone knows the core app. That's how we got started. We have a banking app now. You can get checking, savings, credit card. We have a non-custodial wallet where you can use DeFi. And we have the Trump accounts, which is doing really well to help America's children start to investing. And so the more you look at it, anything you want to do for your financial lives, Robinhood should be able to do that for you.
Do you still view the company as fintech?
Fintech is a little bit of a misnomer. We are a technology company that happens to be in finance. And so all of our product managers, all of our engineers, everybody is there. We're highly regulated, and we take that seriously. But for us, it doesn't matter what the title is. Like, are we serving customers' lives? And if you ask them, many people say, I bank with Robinhood. I do my finances with Robinhood. And that's what we're focused on.
Who's the core customer nowadays?
Yeah, so if you look at our median customer, 35 years old, tend to be widely distributed across the US, tend to be married, educated, 1 to 2 kids, cat or a dog. Like that is our prototypical customer, and they want to use us for all their products. So they typically come in, I want to start my first equities, I want to have a retirement account, I want to get the credit card. Then you discover Robinhood Gold, then they start to use other products. And so when I joined 8 years ago, our average customer was actually 27, 28. Our customers are aging with us, they're getting more wealthy. Now they want to use more and more of our products, and so that's how we're building for them.
Where do you think, because you talked a lot